budgeting. We're going to look at what budgets are, advantages and disadvantages of them, and zero budgeting. And then we'll finish the section with variance analysis. So, what is a budget? All it is a target for a firm's costs or revenues. So, a production or expenditure budget looks at planned costs, and a sales revenue budget looks at planned revenue from selling products. It's really what a business thinks its costs and revenues will be. This leads on to one of the problems of setting budgets. They're set for the future, but a business doesn't definitely know what its sales revenue will be in the future. It estimates what it'll be, and of course, there are things that can affect the accuracy of sales revenue. For example, if a competitor brings out a new product, your sales revenue might fall. Another problem is setting a target for a budget that's too high, and staff think it's unachievable. They may end up demotivated, which will affect the budget in a negative way. On the other hand, setting a budget that's too easy can also be demotivating. So there's a lot of skill involved in producing accurate budgets. So if they're so difficult to set, why use them? Can you think of some reasons why firms set them? Have a go at noting down some ideas. Managed to note some down? Let's have a look together at the benefits of using a budget. Motivation. Staff may like the responsibility of sticking to their budgets and getting the recognition for doing this. This fits with Hertzberg's motivation theory. Improved coordination. Managers can ensure that staff are working toward meeting the firm's aims and that people in charge of budgets aren't overspending. Improved efficiency. Businesses can look back on their budgets and decide if they were accurate or not. If they're not, they can look at why and try and get it right for future budgets. This is something we'll look at a bit more when we go through the variance analysis. Delegation. Because pre-planned targets are in place, managers can delegate authority, knowing that subordinates have set targets to work to. This can free up their time and can be motivational for the employees. So these are the benefits, but you'll also need to mention the drawbacks of using budgets so you can write balanced answers for the examiner. So let's have a look at them. Predictions. Budgets, like we've said, are predictions of future costs and revenues. So if the actual results vary a lot, then the budget loses its usefulness and might demotivate staff. Poor decisions. Sticking to budgets too strictly may mean that poor decisions are made. For example, to keep costs down and within a budget, a firm might swap to a cheaper supplier. This will mean that the budget is stuck to, but it may also mean that product quality falls and customers will stop buying. This in turn will affect the sales revenue budget. Negotiating skill of budget setter. Some staff that set budgets may be able to argue very well for an increased budget. Let's say the marketing manager can argue a good case for a larger promotional budget. This might mean less money available for the human resources budget, which in turn could mean less training for staff and less efficiency. This last point is also a drawback of what's known as zero budgeting, which works by setting each budget at zero and getting managers to justify why they need a certain amount. The more persuasive managers will therefore end up with bigger budgets and leave those that really need increased budgets with problems. But zero budgeting is commonly used because it forces the budget holder to actively plan what they need and won't allow one department to have a bigger budget just because it always has had. So there's a benefit and a drawback of this. Before we look at variance analysis, let's have a look at an exam question. We'll use the example of a business which has just taken on a new manager. This can be for a business of your choice. Just remember to relate your answer to the type of business. Here's the question. Analyse a benefit of delegating control of budgets to a new manager. Pause and only spend about 6 minutes on this question. How'd it go? Let's have a look at some of the points you might have covered. For this question, you need to show the examiner that you understand the topic, can apply your knowledge, and can analyse your work. There's no need for evaluation, because the highest skill you need to show is analysis. Now, you probably started off with a definition, which is good because it'll show your understanding straight away and get you some content marks. What's key in this question is that you can think of a benefit of delegating control of budgets. In other words, letting someone lower down the hierarchy have control of them, and you can link this to a specific business situation and show the consequences of delegating the budget. In this case, the manager is new and delegating a budget may allow the new manager to get a better understanding of the business more quickly and be motivational. If he's more motivated, he'll most likely work harder to stick to the budget. For example, if it's a sales budget for the surfboard business, he might try and encourage sales staff to sell accessories when someone buys a surfboard. There are other advantages as well, like controlling spending, but the approach you take to the answer would be the same. You need to ask yourself how you can link your ideas to a business and what the consequences to the business will be.